What's up, guys? Welcome to today's video. Hope you guys are all having a great weekend so far. It's currently Saturday afternoon, 1 p.m. I'm here at the office going to film a couple videos for you guys today, and I actually just recently figured out something that I'm super excited about. For the last, ever since I've been filming in my office, I've had two microphones going every single video, so there's been echoes and I've never been able to figure it out. But someone actually had commented a couple videos ago and they mentioned that there most likely is two mics picking up my voice, and that's why it was echoey. So I just did a little bit of digging and I think I figured it out, so hopefully the audio sounds a lot better. Today's video is going to be talking about what I've personally noticed in the current real estate market in Arizona. We have 5 properties listed right now, and we've seen a huge shift in the market. Probably, I would say it's August now. We started seeing a shift mainly in June. July, August just progressively got worse. We're starting to see a little bit more traction this week specifically, so I'm going to touch a little bit about that as well. But I also want to talk about what we're seeing on more offers, and then also talk about and just show the supply and demand change that we've been having over the last couple months here. The data that I'm going to be showing you guys is from the MLS, which is a real estate software that I have access to in the greater Phoenix area. So inventory has increased throughout the entire United States, but the data I'm showing here is going to be for Arizona specifically. Here we go. This is the data that I wanted to show you guys. I'm going to try to make sure I'm not in the way when I'm showing you guys this right here. So on the left side right here is the sold median sales price, and this is basically over the last 12 months, this chart specifically. So it goes from August 2021, excuse me, to July of 2022, and it usually updates towards the very last week of the month. So we're not going to see August data until about 3 more weeks from now. But you guys can see from June to July, we saw the most drastic drop, and the average median house price went from $473 in June, and it dropped down to $452,000. With this price drop right here, the biggest reason, I think, obviously interest rates are going to have a huge impact. As interest rates go up, it costs more money, or it's more expensive to borrow money. When it's more expensive to borrow money from the banks or lenders, your monthly payment's going to be higher. So I think it's pulling back. That's causing a lot of people that don't necessarily need to buy a house, investors that just the numbers don't make sense anymore with higher rates. And it's also like vacation homes and things like that, where people are holding off on that because they don't absolutely need it. I think the only buyers right now currently are the people that absolutely need a property. So we are still seeing some active buyers, but the buyer pool has been very, very limited, and that's going to reflect over here with the active listings. By the way, from $473 to $452,000, I believe that's about a 4.5% price drop month over month, which is pretty significant. If you guys look over, I think we even dropped below March. We're kind of equal out to around February of this year, and February is really where we started picking up at the beginning of this year. February, March, April, May were just insane growth months, and then we just seen a huge drop off right here. Now, generally, as prices drop, there's less buyers. You're going to have higher days on market. So this is days on market, how long a listing is sitting. And we actually saw a huge spike here as well over the last 2 months. We went from the average day on market at 26.7 days, and now we are back up to 32. So over a month, these listings have been on market. It's not quite where we were at the end of last year, but I do think coming up, we're going to see some very aggressive price drops once again. I wouldn't be surprised if we see another 4 to 6% price drop when this data comes in for the month of August. We're at 452 right now. I can see us being in the mid 440s once this data comes out for the month, because things are not getting better right now. And then if you want to look over here, this is actually the specific chart that I'm looking at most, and this is the active listings, because obviously supply and demand, if you have more active listings, there's more houses for buyers to choose from. And we're seeing an influx in active listings, partly because I think people are just trying to list their house and get out. And then also because our buyer pool has just minimized tremendously from the amount that we had even 3 months ago. People just stopped buying properties. I think the active listings will start to settle down a little bit. My theory on this is there's going to be a lot of people this month and last month that just wanted to list their house in hopes of selling their property before a huge slip in the market. And I think people are realizing now that, wow, like, I'm not getting what I want for my property. I'm not getting what I could have gotten 3 months ago. And I think the people that didn't need to or don't need to sell their property and were just trying to get out for top dollar, or maybe cancel their listings and just sit on it, rent it out, or just live in it for a little bit longer. So I think we're going to see a little bit of settlement here in the active listings. But if you guys want to look at this insane change here, I'm going to go down to the bottom of the chart, which was March of this year. That was like the peak for us as well. Like insane $50,000-$60,000 over list price offers, waived appraisals, all that kind of stuff. 7,500 listings, 7,200 active listings for the month, and now we are back at almost 20,000, 19,360, which is almost 3x the amount of listings that we had just a couple months prior. So for every one house that was listed in March of this year, we now have about 3 houses listed. So that gives you a lot more opportunity as a buyer to be more selective. And we're seeing that reflect directly in the offers that we are personally receiving. And not only me, I've been talking to agents as well, and they've been noticing this a lot more as well. So one of the big things we're seeing in every single one of our offers that we've gotten in the last, or all of last week, had something called seller concessions. Now, seller concessions is basically when the seller of a property offers to help pay for the closing costs for the buyer. Now, this is often either a flat fee, which is not as common, or it can be a percent of the overall purchase price, which I've noticed has been a little bit more common. Now, I have never seen seller concessions in my life until the last couple weeks here. I haven't been in real estate too long, just about 2 years now, but we never had seen seller concessions. It just goes to show how fast the market has changed and how fast it's changed to a buyer's market. Now buyers are offering under list price. They're not only offering under list price, but they're requesting 1, 2, I've seen 3% of their closing costs covered as well. So a perfect example of this, we're just going to go with our, let's go with our West Phoenix house. We had an offer at $315,000, which is $5,000 under our list price, but she also wanted 3% of her closing costs paid for. So if you do 3% of $315,000, I believe that's around $10,000. So she not only went $5,000 under list and made that offer, but she also requested about $10,000 in closing costs. People are going to be asking, like, why didn't she just drop the purchase price or her offer price down another $10,000? Now, the reason why people ask for seller concessions and not just have a lower ask price or a lower offer price is because they can use that $10,000 towards basically anything that involves a closing, whether it be fees, escrow fees, title fees. A lot of people are using these closing costs or these closing credits to buy down points from their lender. Now, that's a whole nother video, buying down points. I actually bought down a little bit of my last rate. I bought it down to a 5.25. I think I was at like 5.5 or something like that. But you can basically pay more money up front to your lender, and in exchange for paying more money up front, you will get a lower interest rate over your 30 years. Now, this always has a break-even point. But with interest rates creeping up, a lot of people are just asking for closing credits. So they're going to push that $10,000, and maybe they're going to be able to buy down their base rate from, or their rate from what it is now. Like, I think it's like we're 5.5 right now. They may be able to buy it down to a 5%. And over the span of your loan, that's going to save you a lot of money. So people are doing that a lot more now that interest rates are creeping up more and more and more and more. They're like, you know what, let's just ask for closing credits. Let's bring the interest rates back down to what we could have had a couple months ago, and it makes a little bit more sense. So every single one of my offers, one offer had 3%, the other offer had 2%, the other offer had 2% as well. So it's crazy. And we've counter offered on every single one of them. We have negotiated to make it fair for both parties, I believe, because some of the offers that we were getting were just insane. Like the one that I just talked about, $5,000 under, another $10,000 off. That's $15,000 under our list price, which was already relatively low for the overall market. Like every single property that we have listed right now is, I think, the best in the specific neighborhood. So that's pretty much it for today's video, guys. I just wanted to talk about what I'm noticing in the market, kind of the different offers that we're getting and how we're kind of working around that. Moving forward, as buyers to flip properties, we're just going to have to buy them at a deeper margin. And it's really, really, really difficult right now because the sellers that we are talking to and negotiating with, they're still stuck in a mindset that they can get their house sold for what they could have gotten earlier this year. And it's going to take a few months for them to realize that that's no longer the market that we're in. No one's going to be offering that price that they could have gotten 3, 4, 5 months ago. And it's just going to take a little bit of time for them to realize that their property's not worth as much as it used to be. So we're like going in what we think is very, very fair in anticipation of the market continuing to go down. But a lot of these sellers just aren't agreeing with us. They're like, no, I can sell my property for much more. And they're going to realize once they list their property on the market, it's not what it used to be. We're getting probably less than, I would say 60% less showings right now than what we were even in May of this year. So it's slowed down a tremendous amount. Our margins have tightened up more and more and more. I'll keep you guys updated on all that as well. I hope you guys enjoyed the video. Thank you so much for watching. Follow me on TikTok, follow me on Instagram, and I'll see you guys soon.